Thursday, June 13th, the highlight of the day. There's a couple of them, but I want to show this one because it does a couple things. Number one, let's play it and let it go. The NASDAQ was making higher highs. The Russell had a nice jump of about 12 ticks. We go to the top of a identifiable consolidation, which was around, I think, 95. You could start to see it form here as it begins to chop sideways. But we had an intermarket divergence. What does that mean? One market that relates to the market you're trading, NASDAQ, S&P, does something that your market doesn't. Much more strength than the NASDAQ, made higher highs, we didn't. Doesn't mean you could just sell it and get short, but then we had it move through the middle of consolidation and then a rotation with a buyer that came in, and it didn't budge to go up at 94 even. All right, so we started to recognize this intermarket divergence around now, as this was the high back up here. NASDAQ took out their high, but we, meaning the ES, couldn't take out that high, which was still about 2 points away. And so let this, I'm replaying it, and you're going to see as you identify this consolidation, the middle of it is not just an arbitrary price. It matters. And it matters because if you think about a range that's already identified, more people who are long are nervous below the center of it. More people who are short are nervous above the center of it. Just based on simple math. Just keep it simple. As you start moving towards the top, you start getting people who are short, more and more of them nervous because more and more of them are starting to take heat on their trade, or more heat. It's just like a moving average of where most people might be long or short inside just this consolidation. All right, so if you're leaning towards the short side because it can't make highs, even though the NASDAQ and the Russell were giving it fuel to make higher highs, you could see it drag lower. That doesn't have to be the moment you got short as it got through the middle of it. There was another retrace stuck long right at 94. And it didn't even hesitate as it came back down through. I want you to listen, because you should be able to hear it as well as see it flash. Right there. Did you hear it? And you see it. Watch, I'll play it again. Or I'll play it through. It doesn't even budge to go higher. So a bunch of people come in, 4 even, buy it, they can't go up. And during it going on, what were we saying in the room? That's your win moment. They should have a test and a move through eventually these 93 evens in the bottom of this consolidation. Then I think that there was another one at 93.25 that it came up to. These are things you got to watch. You're leaning towards the short side because of an intermarket divergence. You see buying come in, it can't budge higher, and you get the downside. There was another moment that had come back through 94 even. That was actually the example. Let me play it again. And it happened so fast, didn't even come up again at 94 even. 4 quarters go bid, or not go bid. They come in and buy it, doesn't even budge higher, and then it released. In a trade like this, your risk is always above the top of this consolidation. Not 1 tick always, or 2 ticks, or 3 ticks. You don't have to be scientific. You just have to understand the context of sliding through the middle, buyers coming in, can't get it to go up, downside's the right side. Now I want you to watch, because there was another moment, I think it was 93.25 after it broke through. 93.25 came, they tried to buy it, and then she came in selling it, and it pushed it lower. There it is. See him coming in, buying it. Then it turns red. That was another win moment. Downside's right side. All right, now I paused that. Let's get this out of the way. I want to show you guys dual head fakes. What do I mean by dual head fakes? Right after the open, take a look at the ES. Had a consolidation box in here. They leaked through the bottom of it. We said as soon as if they get through the middle of it, look out above. That's what happened right before and after the open. Now let's look at the cousin, the NASDAQ, right before and after the open. We have to scroll back a little bit. Same time, same pattern, same call. Here's the consolidation box right around the open. They leak out the bottom of it. Once they travel back through the middle, look out above. Head fake. And you'll see on the website, edgetradinggroup.com, videos, extensive videos that explain why a head fake is a head fake. But in the video I just showed you with this replay, 2 instances where they couldn't take 94 quarter bid. This one leaks down a little bit, this one a lot, and then this 93 quarter was the second one moment that the downside was the right side, and it leaked all the way, I think, down to 89 or even below that.